As this week begins, three markets are approaching institutional decision points: the US dollar index, GBPUSD, and gold. This week is not about predicting price, it is about identifying where smart money is most likely to reveal itself. Let's prepare. Welcome back to Major Circle Trading. If this is your first time here, welcome. Every week, we prepare for the market using smart money concepts, institutional price action, and liquidity based analysis. Our objective is not to predict every move, but to identify high probability areas where institutions are likely to engage the market. Today's briefing, we will focus on three instruments: the US dollar index, GBPUSD, and gold. We will begin from the high time frame for a detailed top-down analysis. Let's begin. So looking at the dollar index, we can see that it has been selling massively since the FOMC rate was released last week, and the dollar experienced very massive moves on the following day when there was an intervention on the JPY pairs, which resulted into this massive dumping. So as we can see currently, what is happening is that price had broken structure from this point some days ago, and now marking our Fibonacci levels, we can identify the premium and discount zones to know where price is currently trading at. We are currently at the equilibrium level, but going into the week, I am expecting to see lower prices, with this one being my immediate draw on liquidity. So I'll be expecting price to come down for these sell stops as we trade into this order block. And if it manages to come down here, then this other low will be a potential place for price to be pushed. So this is on the daily time frame. Coming down to the 4-hour time frame, this is what I'm having. I want to see price come for this sell stops here. And remember, this one was a breakout structure on the 4-hour time frame. After this breakout structure, we are witnessing lower prices. So this is a potential reversal zone for price, what we consider as a mitigation block on the 4-hour time frame. So that is our mitigation block. So I'm currently expecting to see how it will react at this point. And in any case it fails to respect that mitigation block, then this level will be a good zone to also spot reversals. So I currently have a bearish draw, and that is what I want to see being delivered. Coming to the 1-hour time frame, we can see what has been happening. Price traded into the mitigation block and respected it very beautifully. Now we have closed bearish on this candle, and the next candle is currently printing, but we want to see if indeed it will respect the levels. This was a bearish order block here, which price traded into and was repelled. So going forth, I want to see lower prices as we come down to this level. With that said, let us go to the pound, which is the GBPUSD pair, and look at what is most likely to happen. So from the weekly time frame, if y'all can remember, initially I was expecting price to be drawn down to this sell side pool, but it failed. Now the array which supported price was this balanced price range here with that bullish fair value gap. So once price traded into this fair value gap, it supported price to seek the premium arrays. Now, after it had taken the sell side liquidity from this level, I am expecting that my next draw should be this high. Then also remember that this fair value gap has been used multiple times, and it failed to deliver price down here, so I want to see price disrespecting it. And also I want to treat this level as an order block on the weekly time frame, so I'm expecting price to actually respect it as we come for these buy stops here. And remember, we are slightly at the equilibrium level, but we can still trade into the upper quadrant. So this is on the weekly time frame. Coming down on the daily time frame, we can see what has been happening. Once price took out these lows here in the form of sell stops, it reversed and we experienced a very massive push up to the upside. So this is a potential draw. If it can come for these buy stops, then the final draw will be this buy side pull up here. Now this is what I'm currently having, and I'm expecting price to leave this one open, so I'm gonna treat it as a breakaway fair value gap. And going into the week, if price can do something like this, it inverts this level, then it continues going higher. So this is what I'm currently looking at. Coming to the 4-hour time frame, we can see the various levels of interest. So this was the sell side of the curve, and currently the market is printing the buy side of the 4-hour market maker buy model, whereby this is the breakaway fair value gap and this is an order block. So this is the region that is currently holding price. So coming down to the 1-hour time frame, we can see that we have various points of interest. This is a bullish demand zone, a bullish order block, which some people would refer to as a demand zone. So I want to see how price is going to react. Then I'm also having another level of interest here, which is treated as a breaker block. But remember, price has traded into this fair value gap here. And if we mark our zones using the Fibonacci tool, we can see that price had already traded into the equilibrium and slightly tapped into the discount zone. So these are fair value gap at the discount level, and it is currently supporting the bullish prices. So, and remember also that this is a break of structure. So with the break of structure, we normally expect price to come back into the discount or trade into this order block and offer the reversals. So if you look at the 15-minute time frame, you can see that price has already started respecting the structure, with this level being a bullish order block and price is respecting it. So I'm expecting to continue seeing higher prices going into the week with something like that. So the immediate draw will be this high, which is a 47 pip delivery. So that is what I'm having for the pound. Going into Tuesday, I'll be expecting higher prices, and also remember that we are having an FP this week. Then for XAUUSD, just a similar thing. Looking at the daily time frame, you can see what it has been doing. It is currently a bit difficult to trade this instrument because it is moving within a very tight range, and coming up with a draw is quite a challenge. But we can just mark the key levels that price has been recently trading inside. So if you see, This is an immediate draw on liquidity, and this other high is also a potential draw on liquidity. If I want to go high, I would love for price to come for these lows. Then I'd consider going up. If price has not presented any of that move, then going up will be quite difficult. And if we are to go lower, price should come for this high. Then we can validate the sells. But currently, I wouldn't advise one to engage the instrument because you are likely to get losses trading the instruments. So on the 4-hour time frame, it took out the liquidity from these highs, meaning that these lows should be the next draw on liquidity. Once price has taken those lows is when we can expect another setup to unfold. But until then, I am not having anything good on the instrument, so I'm just sitting on my hands as I watch the pound trade into the levels that we have called